In this video, I'm going to talk about the strategy that achieved me 82% win rate in the live market. So it is backtested proven and it's the live markets proven. So it's so simple, it's very mechanical, and in this video I'm going to show you exactly how there is not much to mess up when you're trading it. So let's just get into it. Okay, but just before we actually start with it, I just want to show you the proof that it's 82% win rate over the course of last few months in the live market. You can see all the executions right here. You can also see how this month of December is going right now with really bad price action. It's going insane. So you can just see how good this strategy is. Also, the other thing, if you want to check out after this video the other channel where I post literally all my executions, my live trading sessions, everything, you can go down there to the description, and after this video you can watch this channel. So without anything else to add, let's just finally get into it. So these are the trades that I'm gonna explain you how to execute in the market. But before we do that, let me explain you the whole strategy and what we are gonna trade first. So these are the only two concepts. So before we get into anything, I just want to add that this works on anything, on indices, crypto, options. I personally trade stocks, so if you want to follow me, you can trade Nasdaq, but it works on everything because it's the logic of the market. The second thing is what time frame to trade it on. You can see right here, I'm gonna trade it for this example on the 1 hour time frame, but you can swing this exact strategy and you can scalp this exact strategy. And basically what we are gonna learn with these two concepts is how to spot A setups, so A plus setups, which are going to be 82% win rate setups, and B setups, which are going to be anywhere from like 70 to 80% win rate. So it's going to be less probable setups and more probable setups. So let's just first learn what the fair value gap is and what liquidity is. So if you look at a fair value gap right here, what do we see? We see that we have 3 candlesticks on the chart. So to create a fair value gap, we need at least 3 candlesticks. So how do we spot a fair value gap? The candle in the middle needs to have some kind of larger displacement. So we leave this gap right here. So you can see that here, candle in the middle basically made some kind of a push to the downside, and you can see how we left this gap in between. But let's say, for example, that the first candle had a wick like this. That means that here we would not have any fair value gap because there is no hole in between. But if we move it back to the upside like this, now this would be our fair value gap like this. And then if we move this, let's say wick like this, if it was like this would be our fair value gap then. So dependent on the wick sizes of the first and the third candle and the body size of the candle in the middle, which is the second one, that is just gonna determine if we have a fair value gap and how big is the fair value gap. Okay, so now that we got this simple out of the way, which is a simple part, let's go on to the little bit more complicated stuff. So we need to learn what is liquidity in the market. This one is gonna be a little bit more complicated, but I'm gonna give my best to explain it. So market is gonna always be battle between buyers and sellers, and I'm gonna explain you how we are gonna use fair value gaps. There is always going to be some kind of buyers in the market and sellers in the market, and very important thing to understand in the market is they're both going to have some kind of strength. Sometimes the buyers are going to be more powerful, which is going to bring market to the upside like this. And then when there is no more buyers in the market, sellers are going to be stronger and they are going to bring the market to the downside. And what both buyers and sellers are going to need is some kind of liquidity, because liquidity in the market is actually fuel. And if I want to describe you completely what liquidity is, for example, let's say market pushed to the upside, then made a retrace to the downside right here, which is this low right here. What does this mean? If we start to push to the upside from this low right here, this means that all the people who are going to buy from this low are going to put a stop loss underneath the low and enter the market right here and maybe target something to the upside. Well, if the buyers at this moment are not powerful enough to push the market to, let's say, this high, which is going to be liquidity point of the sellers who sold towards the downside like this, if the buyers are not powerful enough to bring the market right here, what market has to do and will do insane amounts of times in the actual market is when buyers are no longer strong enough to push the market to the upside, sellers are going to take over the market, sweep this low one more time, or sweep any kind of low in the market, because at every single low and every single high there is going to be stop losses. So they are going to sweep this low one more time, stop everybody out, and after that market is going to have enough power to actually push the market to the upside. So market is always going to seek some kind of liquidity, because market actually operates on liquidity. Because if you enter any market whatsoever in the world, you're always going to see market going for some kind of sweeps of highs and lows in the market. So what does liquidity actually mean for our trading? It means that we are always going to wait for a sweep of low if we want to enter buy position like this, or we are going to wait for the sweep of high if we want to enter short positions like this. So basically we always need to see some kind of manipulation in the market happen before we enter the trade. And also we are going to use fair value gap as the confluence to basically show us if the market is going to react from it, or if the market is just going to disrespect it and just blast through it, which is going to be our entry. But let's right now get into that. Okay, so right now I replayed the market, and let's basically go over every single example that I drew right here. So what did we tell? That we are always going to look for liquidity and for the fair value gaps. So the first thing on the chart, if we look for fair value gaps, we can see really big fair value gap on the left right here. So you can see how we have wick right here, and then we have wick down here, and this is the middle candle that we talked about. So this right here is an imbalance, a fair value gap. So if you want to trade to the downside, this is perfect for us, because fair value gaps are always going to push to the side that they were created to. So this fair value gap right here was created while we were going to the downside, so we want to push the market to the downside from it. So basically while we are still respecting this fair value gap with bodies like this, if you do not close above like this, then it is perfect for us, because if you close above them like this, that means that market disrespected them and market is going to want to go another direction. Okay, so basically right now that we know that we are inside of a fair value gap, which is amazing thing for us shorting the market, we want to see some kind of liquidity. And if you check out right here, we can see market push to the upside, to the downside, to the upside, back to the downside, and now again to the upside. And if we'll check, we can see that this high right here, we just swept it. So let's see what the market is going to do. Market is going down a little bit again, and market again swept this high right here. And how are we going to enter the market? So right now we swept liquidity 2 times and we are inside of a fair value gap. And how are we going to know that the market is for sure going to reverse to the downside, and how are we going to actually catch a move? So the thing that we are going to look, since we are right now respecting this fair value gap, we want to see market make a new fair value gap right here, which I think is going to be created right now. And you can see right here we have this fair value gap in the market. So look at this, we have a fair value gap, and the logic stands that we swept a lot of liquidities to the upside. We retested this huge fair value gap right here, and if we right now disrespect this fair value gap, which should push market to the upside because it was created while we were going to the upside, if we manage to disrespect it, the logic stands that the market should just go to the downside. So let's see how the disrespect is looking like. So we want to close with the body below the fair value gap, and once that happens, we enter the market. We can put our stop loss anywhere above the actual fair value gap, and we can target some kind of nice liquidity to the downside. So target is completely on you, or we can target nice liquidity, or we can have some kind of mechanical 1-to-1, 1-to-2 risk to reward, which we can always target. And let's see if the trade is going to play out. And there it is, you can see beautifully dump towards this liquidity, because what market is always going to seek liquidity. So now if we go to the next opportunity, let's see when that opportunity is. So right now if you look at the market, we kind of had the opportunity right here, but we didn't actually get it. The market didn't give us. So we had a fair value gap right here. So this right here was the fair value gap. You can see this one. And then we had, of course, this liquidity that we marked out. So we swept liquidity, we retested the fair value gap. Also, this is the fair value gap right here. So if we look to the left, we can see, for example, we can see that we have this fair value gap right here. So this is the fair value gap, and basically what right now, if we get the inversion, which is a closure above this fair value gap, we are going to enter longs, and let's just wait for that to happen. So market right now did not close. it just wicked above. So this is the closure right here. We just wicked above it and then closed back down. So let's wait a little bit more if we are actually going to get the closure. So we still did not close above, and let's see, you can see all the bodies are well below the actual fair value gap, and you can see market basically rejected from this fair value gap. So since we didn't close above it and disrespect it, we just respected it and started going towards the downside. So basically, what are we going to do? We are going to just not enter the trade. Also, as I told you guys, we have A setups in the market. So A setups and B setups. A setups are when we have both fair value gap and liquidity point, and B setups are when we have either liquidity or either fair value gap. Also, if you see right now, we, let's say, respected this fair value gap right here. So if we want to trade towards the downside, we didn't sweep any liquidity right here. Like, this is not really a liquidity, it's very little low. We did not sweep any liquidity, but we retested a fair value gap, and this would be a B short. But since we actually didn't inverse all of the fair value gaps that we tapped into, we are not gonna enter the trade, because we did inverse this fair value gap, but before we closed we tapped into this fair value gap, so we have to inverse both of them, and we didn't get that. So we are just standing off with the trade, and let's see the next trade that is going to happen, which is going to be off of this fair value gap right here. So if we mark out the latest fair value gap, you can see right here we retested this fair value gap and we inversed this fair value gap to the upside, which happened right here. So this is a B setup. So if you mark out, this was right here A setup, this setup right here is B setup. So A setup because we have liquidity, fair value gap, B setup because we only have fair value gap. So let's see if the setup is gonna play out. What do we target? We target some kind of logical liquidity level. Let's see if we are gonna get it. And there it is, beautiful TP. So 1.6 and 2 risk to reward for right now. So let's see after this what is right now happening. Basically we tapped into this fair value gap once again. So let's see what kind of setup is going to happen in the market. So right now we do not have anything, but what we actually do have is maybe a setup cooking, because if we look, market spiked to the downside, swept liquidity, and you can see we have a fair value gap right here that we reacted from. So you can see how well the market is respecting liquidity and fair value gap. So we just so well rejected from it, started going to the upside. What do we have right here? We have a fair value gap. So we have 1, 2nd, 3rd candle. Third candle in the middle has a very big volume. So if we want to enter the market, we need to wait for the inversion of this fair value gap. So are we gonna get it? There it is, a perfect inversion. Target is not gonna be the biggest, so we are just gonna target the closest liquidity point and the only liquidity point, which is this one. And is it gonna play out? I think it should play out because it's very nice setup. Like if you see this rejection, market is clearly showing that it does want to go to the upside. So we swept this. Now what are we basically looking for? We do not have any fair value gap, so we would look for some kind of shorts, because we actually, as you can see right here, we swept liquidity inside of a fair value gap. So we should look for some kind of potential shorts, but the only problem is this right here is the only fair value gap. So let's see if we are going to get a inversion of that fair value gap. So if I fast forward the market, okay, so if this ever happens in the market, if we get a candle like this that actually inverts the market and swept some kind of these little lows in the market, we do not want to enter the market because market just clearly swept everything. But if we just fast forward the market, you can even see that this setup actually ended up winning. So if we were to take this setup to, let's say, like this, and to target to the downside, it would actually win in the market. But do not take this in the live markets. So let's go on to the next setup, which is gonna be right down there. You can see me, I marked it. So what are we doing in the markets? We swept this low all the way down here, and we retested this fair value gap. So this one is a little bit weirder fair value gap. You don't have to know what it is, but it's a new weak opening gap, and basically it's just a same thing as fair value gap. Maybe it's just a little bit stronger because it's a new weak opening gap. So let's basically see. We have liquidity, we have, I'm gonna call it fair value gap, and what do we do right now? We just wait for the inversion of the fair value gap, which would be this fair value gap. But the point is, you always have to take note of every single fair value gap that happened right here. So we have two fair value gaps, and the thing that we had like somewhere right here is we inversed first fair value gap, but we tapped into the second fair value gap, so it's not valid to enter if you do not inverse both. But in this example, you can see what exactly happened is we inversed the first fair value gap without tapping into the second fair value gap. So this is a valid entry right here. And what can we target? We can target some nice liquidity point. We can also target maybe this high all the way up here. I'm not sure if you are going to get that take profit all the way up there. It seems like we actually did. So if somebody wants to target, let's say 6.6 risk to reward, they absolutely could. So you can basically see in front of me how well this strategy actually works. It's like playing ping pong with the market. And just before I finish the video, I actually want to give you something for completely free. So the strategy that you just watched, I want to give you a complete playbook of that strategy. So if you want the complete 10-page playbook, just go down there into the description and just claim it for completely free. Also, if you like the video, if you want to see more of these videos, just leave a like, subscribe to the channel so you always get the newest videos, and it just makes me know that I'm doing something good when doing these videos. And maybe if you just want to fast forward your journey, you can go down there and actually book a call to maybe see if you are a right fit for one-on-one mentorship that I currently hold. So with all of that being said, I'm just gonna see you in the next video. Peace.